Welcome back. Today we're digging into the Day 102 health report for the PLAZM protocol. Now, if you just glance at the prices, things might seem a little quiet. But let me tell you, under the surface, the protocol's engine is firing on all cylinders and hitting some major new milestones. Let's dive right in.
But first, you know the drill, our mandatory disclaimer. This is all for educational purposes. It is absolutely not financial advice, and you should always do your own research. So, what's on the docket today? Well, we're going to start with a quick market snapshot. Then we're getting into the two huge stories of the day, hitting that 11% burn milestone and a new historic low for liquid supply. After that, we'll look at a massive crossover event that's right on the horizon, see the protocol's defense system in action, and finally, count down the days to day 118. All right, let's kick things off and get a quick feel for the market here on day 102. Okay, so you can see both PLAZM and E-share prices are down just a little bit, kind of continuing this period of consolidation. But as we always say around here, price is just one piece of the puzzle. The real story, the real action is all happening under the hood, with the systematic strengthening of the protocol itself. And that brings us to the first huge achievement of the day. We've just crossed a really significant new threshold in permanent supply destruction. That's right. As of day 102, more than 617,000 PLAZM tokens are gone. Poof, forever. We're talking 11% of the total supply just permanently wiped from existence. And this isn't just some number on a screen. It's a real, permanent reduction of the available supply, happening every single day. Now, what's really wild here is the acceleration. Think about this. Just 18 days ago, on day 84, we were sitting at only 3% burned. Today, we're at 11%. That's an 8 percentage point leap, which means nearly 500,000 tokens have been zapped out of existence in just over 2 weeks. The burn machine is definitely picking up steam. But the burn is only one side of this whole compression story. Let's look at the second major force to play right now, this incredible squeeze on the sellable, or liquid, supply. Get this. For the first time ever, the liquid supply of PLAZM has dropped to just 37%. This is a brand new all-time low. So what does that actually mean? It means less than 4 out of every 10 tokens are even available on the open market to be sold. This is a huge deal for the stability of the protocol. So you might be asking, where did all that liquid supply disappear to in just 18 days? Well, this chart shows the three-way compression perfectly. Over 700,000 tokens got locked into staking. Nearly 500,000 got burned, and another 200,000 plus were added to liquidity pools. Every one of these actions pulls tokens out of that immediate selling pool. It's beautiful. Okay, so all of this relentless staking pressure is leading us to what might just be the most important developing story for the entire protocol, a truly historic shift in supply dominance. I mean, just look at how close these two bars are. The percentage of staked tokens has climbed all the way to 36%, and it's breathing right down the neck of the 37% liquid supply. When this crossover happens, and believe me, it looks imminent, it will be the first time in history that more tokens are locked up by long-term holders than are even available to be sold. That is a massive psychological and mathematical milestone. And when you zoom out and add it all together, the total protected supply is now at a staggering 63%. That's all the tokens that are staked, locked in liquidity, or burned forever. These are tokens that are not just sitting on an exchange waiting for a sell button to be clicked. This right here is the true measure of the protocol strength. Of course, this kind of compression doesn't just happen in a vacuum, right? The protocol has to actively manage the daily token releases, and the last 48 hours have been a perfect stress test for its defense systems. So over the last 2 days, the protocol has put about $50,000 from its buy and build pools to work, soaking up selling pressure from these elevated token releases. And I want to be super clear. This is not a sign of weakness. This is the system working exactly as it was designed to. And here's the really clever part. The defense is adaptive. It's smart. When things are calm, it uses sustainable buy rates. But when it senses high release pressure, like what we're seeing right now, it automatically kicks into what we call storm mode, cranking up its buy and build rate to 10% to provide much stronger support. It literally adjusts on the fly. So, the defenses are holding the line, but they won't have to be in storm mode forever. So the big question is, for how much longer? Well, let's look ahead. We're in the final stretch now on the road to normalization. We are just 16 days away from day 118. Go ahead and circle that on your calendar, because that is the key date when this high release period officially ends, and the daily token emissions get cut way, way down, taking the pressure off the protocol for good.
And this chart right here, this is the light at the end of the tunnel. Today's release pressure was over 174,000 tokens. By day 118, that number gets slashed by more than half, down to just 77,000. That is a massive drop in daily pressure. And what's really important is that the whole time, the protocol's yield engine is humming along in the background, constantly refilling those defense pools for this final push.
So let's put a bow on all this. What's the final verdict for day 102? Honestly, it's just a story of relentless, systematic progress. Let's just run through the checklist, shall we? Did we cross the 11% burn milestone? Check. Did liquid supply hit a new all-time low of 37%? Check. Is the great crossover between staked and liquid about to happen? You bet. Total protected supply at a rock-solid 63%? Check. Adaptive defenses tested and proven? Absolutely. And are we just 16 days away from normalization? Check. The machine just keeps on working. 11% burned, 37% liquid, staking at 36%, nearly equal to liquid. The crossover approaches. The compression continues. 18 days of systematic strengthening, 16 days to normalization. Every day the float shrinks, and every day the protocol gets stronger. And that's our report for today. Please, just remember, this is all for informational purposes. You should never invest more than you're willing to lose, and it's critical that you do your own deep research before making any financial decisions. Thanks for tuning in.